Perseverance is a great element of success. If you only knock long enough and loud enough at the gate, you are sure to wake up somebody. Henry Wadsworth Longfellow. Where are the markets today as we end the week? We see stocks pulling back strong. We see 20-year U.S. government bonds popping up. We see gold about flat, just a little low. We see Bitcoin pulling back and shortening. So let's jump into these charts and see where we are. We were hoping yesterday that we would see, again, the S&P 500 push through this level of resistance that we had. We can see where the previous high was, and we had a green spinning top as we were ending this week. We saw things start bleeding off yesterday, hoping that it would hit some levels of support, but it went down throughout the day. Now, what we talked about where to jump in, you can look back at the grid. Again, we published that grid to all of our subscribers at chartingwealth.com. That's free. Just go there, sign up. You'll get our grid, which gives you the ticker, the prediction, the support, the resistance, the probability of the movement, the buy point, the sell point, and the expected amount of movement in dollars. And we had specific levels to hit in order to go long. We did not have that happen. Instead, things moved over. What did we do? Of course, we reset looking to see if we would hit those support levels, where they might rally and where we might buy in. Here's where we are today after the plummet down. We are now bearish to neutral. We're looking for strong support around the 594, 598 mark. I myself, and again, I don't give market advice, we're an education firm. I myself was looking into buy-in at about that 598 level of support to see if indeed we would watch the market move down to that, start getting some volume on a rebound up, because we do have strong level of support right there around the 598, 594. I was looking at the aftermarket. I had a buy order in at 598. Market settled out. Lowest it popped down to was the 599 mark. As I was thinking about after markets closed, went ahead and canceled that order. I put me a new order in at 594. I'll be monitoring that Monday in the early hours. And of course, as the market opens, I always set up, not always, but a lot of the time I set up my buy orders. If I'm not buying exactly then right at a good price for the market, if I'm waiting to hit a certain sweet spot, then many times I will put in a good till canceled sell order on extended hours, because I want to catch the market maker doing their thing early on or late in the day. So I went ahead and changed that order up, and I'm hoping that maybe we'll see some further contraction hitting that support level of around 594 or so, and then springing back up. Our probability is 70% down, about 60% for recovery. And again, if we hit low enough, I'm willing to buy in and ride that. We see resistance at 605 to 610. Again, the buy point in that 598 mark or so. I'm going all the way down to 594. I want to, again, not risk a lot if the market contracts really strongly. So I'm going to look for that lower support level. I may miss the trade, okay? I understand that. That's okay, my friends. I don't lose any sleep if I miss a trade that could have worked, but I had a lot of concern about and didn't have a great deal writing things up for me. What did I say to start the show? You know, the whole thing is you don't lose. You don't lose. The number one rule in trading is not to lose. Number two rule in trading, not to lose. Number three rule, make money. So where we see our sell point is at the 605, 607 level. As we're looking at things to top out the expected movement over the next 5 days, we see if indeed we do hit that support level and push back up through it, $5 to $7. Not bad. So we'll continue to monitor and see how we do. What about the Qs? Now, the NASDAQ was down 2.08% for the day. The S&P down 1.71%. So again, it was a hefty retreat of both our stock indexes for the day. Started on Thursday, continued on Friday, really in the afternoon, pounding down. We can see that we got a ways to go before we penetrate that weekly trend line. We did end with a red spinning top, so we do have downward pressure. That downward pressure, again, leads us to a bearish to neutral for the next 5 days. We see support around the 520 mark to the 525 mark. We're currently at 526.08 right now. We see resistance as we move up at the 532, 535 mark. And then as we continue to look through the probability, 75% down, 60% recovery. And of course, our buy point is around the 520 to 525 mark. I'd be very cautious there. Sell point is around the 532 to 534 with an expected move at about $5 to $7. So that is where we are on both our stocks with these pullbacks for today. Again, we do have lines of support to help us out if indeed we continue to see things retreating. And we'll update you on Monday as to how, again, those percentages work out and what the market actually does with this latest pullback. But again, still so many, as we look at the indicators, we're still seeing the ability for things to pop back up again. What about 20-year U.S. government bonds? You know, we saw our latest high was back on the week beginning the 3rd of February. That high was $90.18. Last week, $89.68. This week, $89.93. It's just stalling. You can see it sliding sideways, down some on the 2-day chart. Harder to see on the half day. You have to go a little further back because it's more candles. You can see where things peaked back on the 5th, Wednesday the 5th in the afternoon of February, rolling down and again popping back up, but not reaching that prior high. Where does that lead us? Well, sideways to slightly bullish as things have peaked above that just prior high back on Friday the 14th. Haven't hit the high of the prior Wednesday the 5th, but again, reaching higher than that Friday the 14th in the morning, in the afternoon on this Friday the 21st. So again, up 1.21% for the day. So where does that lead us? Well, we're looking at support around the $88 to the $89 mark. Resistance at about the 90.5 to 91.8. About 70% probability of continued up movement. Our buy point, you know, we're right there in the buy point at this point. Sell point's 91.5, and we've got a $1 to $2 movement. That doesn't excite me a lot. $1 to $2, we're at 70%. We're already at the buy point. I mean, again, with spinning tops, not super excited about where that is. Just not. So we'll go into the next week and see if anything excites us as we move forward. Again, you got more information, something excites you further about bonds, by all means, write it down, use your trade worksheet, chart what you're doing, and learn from it. What is up with gold? Well, the precious metal, we're slightly bullish there. We see support at 266 to 268. We see resistance at 274 to 276. We got about a 65% up probability. We see the buy point at 268 to 270. And of course, we're right now at 270.74. Gold is getting long in the tooth, isn't it? We can see how the volume on the 2-day chart has been pulling back some. don't have the largest of candles moving forward. But again, as we look at what's the high on the latest 2-day candle, 271.84, 271.35 before that, to 70.39. So again, gold continues inching higher. We can see on the half day as it's inched higher, but again, a doji in the morning this morning, a little bitty candle in the afternoon, and overall pulling back for the day just a little bit. So again, I'm just cautious about how much higher gold is going to go. But nonetheless, we've got about a 65% probability of an up movement of around $4 to $6, So again, up around that 274 to 276 sell point, with resistance right there at the 274, 276 level. So again, that's a few dollars. We'll watch, wait, and see as things move along. Now, what about Bitcoin? Retreating again after we had, those 2 days of up movement, green spinning top in the morning on Friday, rolling over in the afternoon, going down 3%. We look at the 2-day chart, we can see how it has stayed below with a doji here to end the week. And again, weak volume since, my gosh, all the way from Wednesday, the 5th of February. I almost said November. I have no idea why. We look at the last 3 weeks if things have moved down. The low back on the week beginning the 3rd of February, $26.74. Then last week, $26.71. And then this week, $26.39. So again, as we watch Bitcoin, it is perhaps getting a little lower, but it's darn hard to see as it does retreat. But again, very, very small amounts. Pulling back after those, 2.5 days of up movement, then crashing over in the afternoon for a down day of 3.80%. Where does that leave us for the week? Well, as we go into the next 5 days, neutral to slightly bullish, support is at the $26.50 mark to the $27 mark. We see resistance at $28 to $29.5. About a 50% chance of a breakout. I'm not going to be throwing a lot that way. We do see the buy point is at $26.50 to $27. We're already at $26.83. And again, the sell point around $29.30. So I'm going to let Bitcoin ride for right now, see how it shapes up over the course of this next week. So as we end the week, I told you I'm looking to jump into the S&P if indeed it does pull down to that support level of $594. Please, think about all the possibilities in the market. Follow these charts. See what they're telling you. If indeed you're going to make any practice trades over the course of this next week, please use something that is always valuable to use is the trade worksheet, where you fill in what your reasoning is, what the candles are showing you, what the volume's showing you, why you're making the decisions you're making, not just to start the trade, but throughout the course of the trade. And then selling. And then, did you lose? Did you win? Why did you win? Why did you lose? All those kinds of things. It is the best thing you can do to put your training on hyperdrive. And of course, we've got a whole chapter dedicated in my new book, 3-Wave Trading Advantage, on how to use the trade worksheets, the daily market, the weekly market worksheets, to really expand your training and your learning and to help put you into hyperdrive. God bless my friends. All the best from the whole team at Charting Wealth.